London Metal Exchange and on the Shanghai Future Exchange are quite mixed this morning, Tuesday the 15th of December. Mixed despite actually the fact that we had some healthy Chinese economic data coming out earlier this morning. We could see that the Chinese fixed assets investment grew up by 2.6% in the year to date compared with the last period. We could see that the Chinese industrial production climbed by 7% in November compared to last year. The retail sales grew up by 5% year on year, and the unemployment rate dropped to 5.2%. And foreign direct investment grew by 6.3%. So actually quite positive data, economical data from China. But as I said, we have quite a mixed market on the LME this morning. Aluminium is losing roughly 0.3%. Zinc is almost unchanged, climbing up slowly 0.2%. Nickel is going up 0.4%. Lead is the biggest loser this morning, losing 0.65%, while tin is almost unchanged. On the precious metal side, we can see that the spot gold price is firmer, going up 0.8% this morning. The ounce is being traded at $1,841 a ton. Silver is also up almost 1.5%. The ounce is being traded at $24.19. Palladium, the ounce is at $2,317 an ounce, and platinum is being traded at $1,014 an ounce. The US dollar index is also still on low ground, was recently quoted at $90.71. The euro against the dollar is almost unchanged compared to yesterday at 121.50. So on the key data side, besides this positive Chinese data we had earlier this morning, we will have today the UK unemployment data coming out. The French consumer prices will be released, Italy's trade balance, and we will have US data earlier this afternoon then on the US manufacturing, on import prices, on capacity utilization, and also on industrial production. So again, today we can see that the base metal prices rallies have more or less paused, which lead the main metal moving lower, and nickel is still rallying, going up today. We have been here before the markets have lost upward momentum and have looked tired, only to see them go on extended gains later after a rest. Well, at some stage this pattern is likely to break, but given the strength of this common trend we have right now and the bullish long-term implications of all the infrastructure spending, it's foolhardy to try to call it top, and as such it's probably best to wait and let the market show its hand. Have a good day.